Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is James Fryer, who's an experienced mining underwriter for Inigo, who are global specialists in high risk, high capacity insurance and reinsurance lines, serving some of the world's largest commercial and industrial enterprises, including the mining and resources sector. James is going to explain a little bit about how the insurance industry works, what mining companies need to do better from a risk perspective, how insurance companies can improve their negative reputations, and what are the current risk challenges in our industry, and what makes a good mining client from an insurance perspective. Before I start, I just want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, asset criticality assessments, and more. Working across 600 sites globally, Hawcroft supports all areas of mining and resources and minerals. So if you're looking for any property insurance risk management services, then visit their website, www.hawcroft.com. All the details are in the show notes. James, welcome to the podcast. How are you doing?
Very well, thank you. And thank you for having me, Rob.
Yeah, appreciate your time as well. So, as we always start these podcasts off, just wonder if you can just tell us a little bit about yourself, about your career, how you got in the insurance game and how you got into the mining industry.
Yeah, certainly. So my background is chemical engineering. I'm a chartered chemical engineer. I worked in industry before getting insurance. I worked for one of the world's largest engineering contractors, traveling around the world. I also then worked for a large international cement company. I think if you ask anybody how they go into insurance, then most people would say, I have absolutely no idea. I do not recall. And exactly the same with me. At some point, I moved over from chemical engineering. I joined the insurance sector in 2001 as a risk engineer, without realizing there was a whole industry behind risk engineering, which is exactly what Hawcroft do. But I worked within the insurance industry, doing a lot of mining, a lot of heavy industry, doing risk engineering. Did a stint as a loss adjuster, and then went into underwriting in about 2008, doing heavy industry, construction, property underwriting, concentrating more and more on mining and operational mining, to the extent that since about 2011, I've been underwriting mining risks almost exclusively within the company insurance market, and most lastly within Lloyd's insurance market, and I'm now with Inigo Syndicate.
So I wonder if you can just tell us a little bit about Inigo and the history of the company, and also your role within the insurance group.
Yeah, absolutely. So Inigo is a relatively new insurance syndicate within Lloyd's. We started in 2020. I think we started underwriting in 2021. We don't offer everything to all men. We look at specialised insurance lines, of which mining is one of those. I joined in 2023 to start the insurance book. And we now have around 180 mining clients globally on the mining risk side. On the Mining Insurance and Risk Association, which is a non-profit organisation made up of mining companies, insurance brokers, insurance underwriters, lawyers, risk engineers, loss adjusters, forensic accountants, basically anyone that's involved in mining risk and insurance. We've got over 100 members globally, hundreds of individuals. That was actually started in 2014, so we've been going for just over 10 years. But we work in improving education, consultation, and collaboration across mining, insurance, and risk. And I should say that I'm the current chairman of that group. and have been since 2018.
If we look at obviously insurance companies, I suppose many of the people listening to this episode are involved or have liaisons with obviously insurance companies, whether it's your car, house, etc., like that, and they perhaps, I suppose, get a bad reputation. Why do you think that is? Obviously, people's perception of what they expect from an insurance policy versus what they actually get.
Yeah, it's an odd one. I think, if all goes well and individuals, companies need to claim on the insurance policy, quite often they have a good experience. They get a good payout, everything's fine. You only hear about the bad stories. And I think, there are lots of, unfortunately bad experiences that people and individuals have. And I think that necessarily comes down to people's perception of what an insurance policy actually is. And that really goes back to how detailed of an experience they have within the insurance industry. And that applies whether you're buying your home insurance, car insurance, or you're buying a very complicated, very expensive mining property policy. I do come across people that assume that they've bought an insurance product and that insurance product should give them a payout whenever they've had a financial loss, they've had a loss incident, and regardless of the details of that loss, then the insurance policy should give them basically all the money back. In reality, that's not what happens. I think most companies should appreciate, and many do appreciate, that insurance is just another method of risk management. It's that transfer of risk from the company to a third party, in this case being the insurance company, that in the event of a loss, subject to the terms and conditions, always read the small print, that policy will pay out. But there are other methods of risk transfer typically available, traditionally available, being avoidance, being reduction of the risk, and ultimately acceptance of that risk, and then using risk management on site in order to control that loss experience. I think not all insurance policies are made the same. They are there to respond to the unforeseen and fortuitous events, but they don't all cover the same thing. So it's really important that anyone buying that insurance policy understands what it's covering, but also what it's not covering. And that's why most big companies, mining companies, will use an intermediary. They will use an experienced broker to liaise with insurance companies in order to get them obviously the best cover for the premium that they have available, but also to explain what's covered and what's not covered. And I think most conflicts that arise in that insurance process is because those companies and individuals don't understand the details of exactly what they are covering. Ultimately, insurance companies are always going to be the bad guys. I don't think there's anything we can do about that, apart from to try and educate people in terms of what they're buying and what they can expect and their expectations.
Yeah, I was just about to say, following on from that, obviously a lot of us buy insurances, as I've mentioned, and I purchased some travel insurance last week. I guess it's not off-the-shelf insurances that you would have for a mining company, and I suppose, as you mentioned, mining companies are pretty complex. How do you work with mining companies to I suppose agree upon an insurance policy for that particular mining company? And obviously, that mining company may have one operation, could be an exploration site, have one operation or multiple operations. So do you tailor insurance policies to individual mining companies based on what assets they've got and what liabilities and risk they may have?
No, absolutely, we do, Rob. Our role as mining specialist underwriters is to work with the mining companies to develop a product that is specific and bespoke, to their own needs, their own risks, their own hazards that they have to manage. Not every mine, and this is what's great about mining. Everyone is different. You've got no two mines are the same. The processes might be similar, the way in which you're mining might be similar, but the ore bodies are all different. So yeah, and they're all in different locations and regions, each with their challenges and their merits. So our job is to work with insurance brokers and the mining companies to develop something that is suitable for them. There are products that you are available off the shelf, but invariably those are the products that aren't fit for purpose, and those are the ones where conflicts will arise between the purchasers, being the mining companies, and the insurers in the event of that inevitable complex loss.
What can insurance companies, I suppose, do better? Whether that's obviously trying to improve how they respond to mining losses in order to provide, I suppose, clarity and simplicity.
Yeah, insurance is very reactive. Because we're covering, the unforeseen, the fortuitous, often the unforeseeable. There are those losses that will occur that, quite simply, a 60-page insurance wording contract, just isn't able to respond to. There's always going to be those nuances where you read the words of the contract and you're left thinking, I don't know how that applies in this specific situation. And that's not great for anybody. So our role as an insurance industry really is to be a bit more proactive, to learn from previous lessons, the losses that we've had to deal with, and where there have been perhaps differences of opinion, contentious losses, is to address those issues, to provide conciseness, to provide clarity and confirmation of exactly, in any one given situation, what's covered, but perhaps more importantly for the mining company to recognise what's not being covered. There are, if I was playing devil's advocate, I would say there's elements of the insurance industry that prefer to have elements, sections of the wording that are perhaps ambiguous, some grey areas, because that provides an opportunity to perhaps maximise the cover that the mining company could get. In reality, what it really does is it just extends the amount of time that it takes to negotiate and settle and adjust a loss. And the mining company won't necessarily get back what they think they may have purchased. Ultimately, those types of situations are embarrassing. They're embarrassing for insurance companies, to the detriment of the mining company. So our goal is to provide that clarity and confirmation of cover, because what's really important when a mining company suffers a loss is that when they reach for their insurance contracts, they have some element of certainty that that insurance contract is going to support them and protects them, protects their financial loss when the time comes. So really, that's where we see that we can do more in able to meet our insurers' expectations.
What are some of the current risk challenges our mining industry is facing at the moment, whether they're common or uncommon types of losses? And I suppose wonder if there was any sort of bit of horror stories where companies may have thought they've been insured, but actually found out they weren't insured.
So the types of losses that insurance companies see really are myriads and complicated, and there's a plethora of different sources of loss. It's not like we're insuring hotels and warehouses where all you have to be worried about is fire and the odd windstorm going through. Mining losses. Yes, you have fire, you have explosion, you have those natural catastrophic peril losses, flood and earthquake and windstorm and bushfires, more so. But we have machinery breakdown losses. You have the very mining specific losses like pit wall failures and underground mine collapse and tailings dam failures and heap leach failures. Really, if you can think of it, it's probably either happened or it's going to happen. So we see lots of these, and we learn from them. I think those are the kind of the more traditional losses. We're also very cognizant of what emerging risks are coming up. The advent of new technologies, automation, the ability to remote control equipment on mine sites, introduces, both benefits and challenges. You have the obvious, potential cyber exposures that come with the use of greater technology. On the other hand, taking out the human element from some of these operations can be beneficial. Electrification, underground. Battery operated machinery has been used underground for 100 years. But with the large scale electrification of underground mining fleets, taking out diesel from underground, the environment improves, the need for ventilation goes down. All that is seen as beneficial to the overall risk profile of a mine. But on the other hand, you're introducing the new battery risk, and we've all seen fires on the new style batteries that are very, very difficult to control and extinguish. On the whole, a lot of these things I think are a net benefit to the risk profile, but we still have to be cognizant of are we going to see more losses from some of these emerging risks? How do we control them? And again, going back to the insurance wording, do our wordings need to change because of the new way of mining? And a good example of that is that, and I talked earlier about insurance companies drawing that line of futurity on certain things that a mining company does. And one of those would be remote control boggers in an open stope underground. The reason why they're remote controlled is because of the health and safety exposure to putting a person in that situation where a roof fall is likely to result in a fatality. So those boggers are remotely controlled. So we don't want to cover those. The insurance companies, when I'm talking about the transfer of risk, we don't think that is one of those risks that can be transferred to insurance companies, because if you're not going to put a man on that bogger, then why should we take on the risk? So that's the intent of that exclusion within the policy language, but it's not intended to be there for all remote controlled machinery equipment, because now that machinery equipment is being remotely controlled for operational inefficiency and productivity reasons, not because it's unsafe. So we have to go back and amend that policy language to give the mining companies the cover that they're paying for.
What technologies or technological advances are insurers using at the moment? And obviously, you mentioned AI coming into our world. What technology advances are you guys using?
I think there's a lot. On the one hand, insurance can be seen as quite an antiquated industry. We've only very recently got away from physically putting a stamp down and a signature on every single page of a policy document. We now do that electronically. But we've always used quite sophisticated modelling techniques to understand risk and risk exposure, particularly for natural peril events such as floods and windstorms. So that continues. I think for mining specifically, we're seeing a lot of good things coming through at the moment. Whether that's satellite technology for continuous real-time online monitoring of tailings dams, for example. I will mention a couple of names, but they've got companies such as Value.Space that are using satellite technology to monitor the stability and health of tailings dams, of heap leach facilities, as well as other types of property and buildings. That can be really, really useful, and that can be used as a predictor of future losses. perhaps months before, they could suffer a loss. You've got intelligent monitoring of work permits, for example. Hot work losses are a bit of a bugbear within the industry, not just mining, but across all industries. When I joined the insurance industry in 2001, people were talking about how we control hot works, and 25 years later, hot works is still one of the leading causes of fires in industry, and it should be something that is so easily managed and controlled, but it's not. So companies like Site Assist, they have a online electronic permitting system that uses AI to ensure that hot works are properly controlled, they're properly audited. And I think the greater use of that type of technology, could be a step change in how we manage those risks and reduce the effects of those hot work fires. Other than that, we're always seeing advances in maintenance and inspection practices, in the way that equipment, machinery on mining sites is being looked after. Particularly as that mining and machinery gets bigger and bigger and bigger, and the risk profile increases all the time. Some of these mills are very impressive from a size and a power perspective. But if for whatever reason they suffer a loss and they're no longer operating, the financial impact, both on the mining company and potentially for insurers is truly significant.
Aside from obviously pure financial payouts associated obviously with insurance products, what else can insurers do for mining companies?
Yeah, absolutely. I mentioned that when I joined the insurance industry back in 2001, I joined as a risk engineer without realizing that there is a whole industry behind risk engineering, which is exactly what Hawcroft do and others do. They send out risk engineers to mine sites for a number of reasons. What's key for us is that those risk engineers that are going out to do the work know mining. There's no point sending a risk engineer that is a semiconductor specialist to go 4,000 meters underground and assess the risks. So that's really key for us. But the role that risk engineer does is manifold really. It's providing information back to insurance underwriters in order that the mining company can best present their risk to underwriters in that a transparent form, and hopefully in order to get as low a premium as possible. So that allows us to do our due diligence when we underwrite a risk. It's also providing advice back to the mining company on good and bad best practice. So these risk engineers, an individual might go to 35 different mining locations globally in any 1 year. Whereas, if you're an engineer on a mine site, in your entire career, you may only work on half dozen or 10 mining locations in your particular country. So, and mining operations are run very differently from one country, one region to another. An engineer on site might not have ever seen a catastrophic girth gear failure in their entire career, but they happen. We insure thousands of mills around the world, and these losses, whilst infrequent, because we insure so many, we do see them. So when these risk engineers are talking to the people on site, they're explaining what they've seen, what can go wrong, so things to be aware of. Obviously the good practice, but also what they've seen that isn't so good and could be improved, and making those risk recommendations back to the site. So that's one role that the insurance company is offering mining companies. We've also got the activities of the mining group that I mentioned at the start. So the Mining Insurance Risk Association, because we're made up of a mixture of mining companies, those risk engineers, underwriters, insurance brokers, loss adjusters, forensic accountants, etc. We've got a wealth of experience, and we've got our different experiences, different things that we're experts in and interested in. So bringing that all together, we've got the opportunity there to provide that collaboration, to educate, to consult on all the different things, all the different issues and hot topics that are affecting the mining, risk and insurance industries, just to raise people's awareness of what's going on. So a shameless plug for our next conference, but that will be in Johannesburg in the first week of 2026, over 2 days, where we'll be talking about lots and lots of different issues affecting our industries. But in between times, we put on ad hoc presentations, we do educational sessions, we have a technical group made up of those technical guys that are looking at specifically at things that affect us, that ultimately aims to raise the game of miners and insurers.
And from an underwriter's perspective, what makes a good mining client, and what can what can mining companies do better from a risk perspective?
Well, first and foremost, a good mining client for us is a client that pays their premium on time and doesn't have a loss. Which lots of mining companies think, well, that's perhaps a poor payback on the insurance spends that we have, but it's kind of counterintuitive for all the other contracts that a mining company may purchase. The best insurance policy is one that you will never have to claim on, because it means that you haven't had that financial loss. And if you have a loss, whilst the insurance policy hopefully will pay out as you expect, it's never going to fully compensate the mining company for the actual financial loss that they've occurred, because of the time and the resources that they put in, and the policy deductible that they may have. So slightly tongue in cheek, but that's what for us makes a good mining company. But ultimately, we want to work with mining companies that want to have long-term relationships, and that enables them to get to know the underwriters well. We form a degree of trust over the years that we are together. That's important because we have to trust that the mining companies are doing everything they can to manage their own risks, but also to be as transparent and honest about how they present their risks to us. But equally, the mining companies want to have the trust that their underwriters understand their risks, and that we are going to pay out when they need that financial support post a loss. I think the best mining companies when it comes to insurance are those that understand what can go wrong. We talked about I talked briefly about girth gears or mills earlier. A lot of mining companies will say to you they will never have a girth gear failure because of whatever reason. It's only a couple of years old, they look after it, they maintain it, but understanding that actually that catastrophic loss can occur, that it will take their mill down very quickly for a very long time, I think that helps in that relationship, just being able to understand what those loss events may be, and perhaps undertake some modelling on the financial impacts that they may incur as a result, and do that kind of mitigation planning for when everything goes horribly wrong.
And what should mining companies look for if they were obviously looking at an insurance company and choosing an insurance company? I suppose what tips can you give them in deciding what insurer they should use?
Well, first and foremost, they should come to Inigo Syndicate, obviously. But if I was to be unbiased, then look, price isn't everything. you can always get a cheaper insurance policy, but yeah, not all insurance policies are made the same. So yes, it's great. You have to, mining companies have to control their insurance spends, but they also need to know what they're buying. So price isn't everything. Obviously, financial security of insurance companies is very important, as well as our ability to provide insurance in different countries. And the insurance product, the underwriter is kind of the front-facing side of the insurance company. We're the ones that are selling the product, but at the back ends we have the claims service. So, again, it's really important for mining companies to understand, what happens in the event of a loss and how that claim is going to be settled, because not every insurance company has the same capabilities of running a claim as some others. Again, from a very biased position, I would say that mining companies should partner with specialists and technical underwriters, particularly for mining, because it is important that they know that their underwriters can, understand what can go wrong and aren't scared and will run away when, something happens that, they just did not know that could happen. So that's really key. And again, spreading the risk. Don't put all of your eggs in one basket, whether that's with, using, too few insurance companies, or using just a panel of insurance companies located in one region. I work in London, and we see a large portion of the world's mining companies coming to London to buy a portion of their insurance needs. But there are other important insurance markets globally. It's always good to have a foot in several different camps.
Yeah.
If nothing else, that it keeps each other honest.
And I suppose following on from that, it can also be down to relationships. So if you have obviously working with an insurer and something you do have to make a claim for whatever reason, and you've had that good experience, then I imagine you would then continue working with that insurer for a longer period of time because you've had that relationship. So I suppose and even if you don't have to use that insurance company, for them to understand as a mining company, and as they change, obviously as a company may acquire extra assets and insurances will change. I suppose having that relationship where you're keeping them informed of business changes, I suppose that helps develop that as well.
No, absolutely, and obviously that goes both ways. A mining company doesn't want an insurer that's going to run away at the sight of first trouble. You want an insurance company that, if you're in the unfortunate, situation where you've had a bit of a checkered loss history, you still want your insurers to be there to support you. You may have to pay a bit more for it, but they're going to be there for you. Equally, underwriters, want to know that, their mining companies, the individuals, there, are going to, keep being there. What we don't want is insurance companies being too opportunistic. We'll write you for 1 year and then we'll come off the next year, at a whim. I don't think that helps anybody. Insurance does go in cycles. Insurance capacity is a commodity, much like the mining commodities that we deal with day in, day out, and it goes in cycles. So it will get expensive and then it will get cheaper. But most people will understand that, and that's why we're looking for those long-term relationships.
And lastly, what's the outlook for insurance companies and the insurance industry within the mining industry? An outlook for the future, and I suppose not necessarily what you're going to predict, but how can insurance companies, I suppose, either work better with mining companies, and how is the insurance industry going to grow and develop?
Good question, Rob. I was talking about the insurance cycles. Mining property is coming off the top of a cycle. So, mining companies will have seen their insurance, spends, all other things being equal, kind of rise year in, year out for the last several years. they should now be able to enjoy a few years, hopefully not too many, but a few years of their premium rates reducing. We're in a slightly odd stage of the cycle, whereas normally when insurance premiums start to come down, it's because the loss experience has been fairly benign, and sometimes that also coincides with commodity prices decreasing. But at the moment, we're not seeing that. The loss activity in the last few years has been quite significant. So insurance companies haven't perhaps made the profits and the margins that they would have liked to have done before premiums start to reduce. And commodity prices, of course, depending on the commodity, they've been pretty bullish. Look at where gold is going to at the moment. I don't think I'd be surprised if gold exceeded that $3,000 ceiling an ounce this year. Certainly wouldn't have said that 12 months ago. So increased commodity prices also mean increasing exposure for insurers, as well as for mining companies. So it's a slightly odd situation. But insurance has been around for hundreds of years. Hopefully we're going to be there for a few more years. We will weather the storm, whatever it may bring. But in terms of the future for the relationship between mining companies and insurers, then obviously I hope that that continues. We enjoy really good relationships with most, if not all, of our mining clients globally, and there are a lot of them. And again, that comes down to engaging with the insurance markets and underwriters, being transparent, being honest, and then we'll all live happily ever after.
Yeah. James, thank you for your time. Appreciate you telling us about Inigo, and also, I suppose, informing our audience about the insurance game, and I suppose answer any questions that people may have, or even their perceptions of the insurance industry. And I suppose it's like anything, you work in partnership with your clients. Things do go wrong in the industry, and obviously we don't want them to go wrong, but unfortunately that's Mother Nature, and we do need to call upon you. So really appreciate your time. If our audience wants to reach out to you, if they've got any questions that they want to ask, how can they go about doing that? What social media platform channels are you on?
You can find me on LinkedIn. Feel free to reach out. You can find me at Inigo. Probably LinkedIn is probably the best bet, or through the Mining Insurance and Risk Association website, which is www.miraasoc.com.
We'll include those in the show notes for easy access. So thank you for coming on. Hope you enjoyed that and educating our industry on insurance.
Great. Thank you very much, Rob. Thank you.
No worries. Thank you. Thank you for listening. Hope you enjoyed that episode. Certainly an episode that you should be sharing far and wide. We may not necessarily always deal with insurance within our industry, but you probably know someone that is responsible for insurance within a mining company who may want to listen to this. And potentially you might even be going through a particular issue where you need to maybe change insurers. So really appreciate if you can share this episode far and wide all across the world to educate our mining industry. Thank you for listening. Hope you enjoyed the episode. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.